Good evening, master traders and money magnets. The SPY is looking kind of bearish here, guys. I showed you guys my structure, this triangle pattern that I had in my last video. It looked like we closed just below that, rejecting from a previous resistant level, previous sell zone, well, previous buy zone turned into a sell zone. Also below the 5 DMA, we're seeing lots of signs of bearishness, micro signs. But before we get to talking about that, I have to say today was a pretty awesome day, pretty awesome trading day. We had some multiple level to level movements. I did not think we was going to get anything at all before FOMC, but instead the market did give us some nice moves. I had the 599 level, as you guys know, it cleared on the 15-minute chart. Unco alerted in his group. I wrote here 599 cleared, put his 600.4 in play. Cleared 599, smashed 600.4. From there, it did attempt the breakout, but unfortunately for the bulls, it was a false breakout right here. Cleared 600.4, broke back below, and it pushed all the way back down to the 599 level before recapturing 599 just to smash the 600.4 level. There was some nice level to level movement before FOMC, and then when we had FOMC, well, it broke down 599. It happened too fast for me, but we did back test it as a resistant, which Uncle wrote in the group. I wrote here 599 back tested now as resistant. If it can hold as resistant, 599 stays in play with 595.5 below. And well, it back tested it as resistant, hit the 597 level again, but it failed to hit the 595.5 level. Overall, we had some decent level to level move. If you played a level to level style, played the setups, you should have been green today. However, we're looking at the daily chart. Are we bullish or bearish? There are micro signs of bearishness, and remember, we back tested that critical 595.5 level as a support. It did bounce, but the way things are looking is kind of looking like a dead cat bounce, and confirmation for the dead cat bounce would be once again breaking down that 595.5 level. Remember, guys, don't ask for patience. Embody it. So we got to embody it. Once we get the breakdown of 595.5, be ready to react and be ready to attract lots of money, because that's going to be very bearish and should send SPY at least down to 591 or lower. 588 is definitely a big possibility. Now, if it's not bearish and if it's not a breakdown, both 599 and 600.4 must clear. It must recapture, because we lost that level. We're below the 5 DMA, and usually, in my opinion, when price is below the 5 DMA, at least in the short term, it is bearish. So recapturing those levels would recapture the fib level and the 5 DMA, and then I would have reasons to believe we go back to the top of the triangle pattern, which is around 604, and of course above 604 would be breakout mode, and when Uncle would resume being bullish. But right now, like I said, we are seeing some bearish signs. Stay bearish below 599 with 595.5 in play. Of course, we got to break down 597, but if we break down 595.5, multi-day move to the downside. Multi-day move to the downside. To the downside is going to be a beautiful move. Okay, do we have the levels? Do we have the setup? Don't get bearish until we break down 597 and 595.5. Don't get bullish unless we recapture 599 and 600.4. Anything in between is just noise, is just chop. Stay neutral. Here is triple Q once again. Now, we had the third test of the bottom of the triangle pattern. So we know now that the market makers are really respecting this triangle with that third test. 527 is super critical, because if it breaks down 527, not only do we lose a fib level, but we also lose the triangle pattern breakdown. So that is when Uncle charters would be bearish. Break it down 530, 528.5, and 527 critical level. I would favor a multi-day, multi-leg move to the downside. If we are to get bullish, and or at least go back and test the top of the triangle pattern, staying above 530 and clearing 531.7, we'll put 533.7 in play. Top of the triangle pattern, and above that, I would favor a lot more upside. 535, 536.7, possibly all the way up to 540. We will be in breakout mode of the triangle pattern. Remember, breaking down 527, get bearish. Breaking above 533.7, get bullish. Anything in between, then we are still in the chop phase. I would play it level to level safely. Scalp mode or level to level. Tesla still consolidating here just below this trend line. Overall, it needs to break out to be bullish. 330 and 331.6 must clear for the breakout. As of right now, bears need to break down 320.5, 315, and 313. Break down those levels. We are good to go. We are bearish, and we're likely heading down a lot lower than 309.3. That is a fib level, 309.3. I'm favoring we break that level down and get back below 300. But But like I said, if we break above 325, 330, and 331.5, Tesla will be in breakout mode. I would expect a $20 to $30 move to the upside. NVDA overall looking bullish still. To cancel this, 144 must fail. It's getting steep here. 144 must fail, and then we should get a nice waterfall to the downside. 140 or lower would be in play. But if NVDA tomorrow or the next 2 days can clear 145.6 and 147, there's a good chance we're heading to 150 plus. Going to need some volume. Here is Coin. Now Coin, I am super excited for this set to talk about this because it was a beautiful move. I did get some new fib levels starting from May 22nd high down to June 13th low. Now I mentioned yesterday's video, we had the inside candle setup. If we're going to long, we needed 256, 257.5 to clear. We needed 261 and 263 to clear. All those levels cleared. The inside candle setup played out beautifully. But now it's on to the next setup. Now right now Unco has support at 293, 294.5 and 293. If it's pullback time, if it's profit taking time, those levels must fail. 294.5, 293, 290, 288 and 286.8. Those levels fail. Profit taking time. But if the squeeze continues, 298 and 300 must clear. Those levels clear, then we are going beyond the moon. And VIX, inside candle setup here. We're going to keep it simple with the VIX. Chop range 19.5 to 21.8. Anything in between, stay neutral, all noise. Above 21.8, we are bull bias, and below 19.5, we are bear bias. All right, guys, thank you guys so much for watching. It means the world to me. I hope you guys made a shit ton of money. Remember, stay magnetic. You are a money magnet. You are a master trader, and don't worry about what the 3D world is saying to you. It needs to worry about what you're saying. Peace.